All right, let's take a look at the gold market today. um, First thing I want to point out is the death cross here. Very often these don't amount to anything. And in fact, most of the time, a death cross occurs when an asset is close to completing an intermediate bottom. And it looks like this is going to be a meaningless cross as well. Prices obviously has gotten back above the 50-day moving average. 50-day moving average is turning back up. Price is back above the 200-day moving average. But I will um, inject a word of caution. This is as a rally just continues to push and push, and the cycle stretches. This is when dumb money, um, inexperienced retail type traders, they become panicked that they're going to miss more of the move, and this is generally when these type of traders will finally have enough confidence to start buying, but it's just too late in the daily cycle. Um, I've been suggesting the exact opposite. We were buying down here after this double bottom, and so now instead of buying, we are trimming positions as the market goes up. We're taking profits as the market goes up. We want to, what's going to happen? We're going to get a daily cycle top here somewhere, and gold may still even make it up to this 1960 resistance zone before the daily cycle tops. It's not unusual for a first daily cycle, which this really isn't, but the first daily cycle was just a double test of the bottom, just a double bottom. So you could kind of regard this as a first daily cycle. And it's not unusual for the first daily cycle to recover all of the intermediate losses. So this would be the last intermediate top. We're getting pretty close to recovering that intermediate top. So this is a major resistance level that I expect is going to turn price back down if it doesn't top sooner than that. And this may just be dependent on whether or not the dollar can find a temporary bottom and give us a rally out of a daily cycle low that they usually last anywhere from 5 to 10 days, and then it should roll over again and continue down into an intermediate cycle low. But anyway, when the dollar bounces, that should give us the setup for gold to move down into a corrective period, probably push this 5-day RSI back down to oversold. So all of the inexperienced traders that buy up here when their emotions give them the okay, when they feel like that they're going to miss the move, and they panic into the market after the move is, or after the rally is already very mature. So they would be buying here, and then they'll get knocked out and they'll sell for a loss when gold drops down into the daily cycle low and this RSI gets oversold. But that's where we want to buy. So right now, after this really long rally, we have been taking partial profits on our positions. We unleveraged, as I mentioned before, we unleveraged once gold tested this 200-day moving average, and then now we're starting to trim those unleveraged positions as the cycle gets more and more mature and closer to a temporary top. And again, I think this is just going to be a temporary top. So if you panic into the market in here and then get caught in the correction, I don't think you need to panic and sell at the bottom of the correction when RSI is back down here to the oversold levels. I don't think you have to panic out, as that should build the fuel for the next rally. And I think the next rally could probably test and maybe even go a little bit above last year's high right here. So right now we want to be building up cash, and we want to deploy that cash when this RSI comes back down here to oversold, and where everybody else is scared, where the late buyers are panicking and selling for losses. That's where we want to be buying. Right now we are taking profits after a very nice move. This is a very mature cycle. Like I said, may still have a little further to go. It could reach this resistance point here at 1960 before topping and then moving back down, but it's just too late in this daily cycle to be to expect any further gains are almost certainly not going to be sustained. So while we may rally a little more here, we're going to give those gains back at some point. So what we want to do is buy at the beginning of a daily cycle. We want to buy like on day 1 or 2 or 3, somewhere in here, and then we want to be selling as we get. We're 40 days into this daily cycle. This is when we want to be trimming positions, not initiating positions, and certainly not getting into leverage right now. And moving on to silver, I still tend to think that this is where the big move is going to occur in the latter part of this intermediate cycle. Right now we're stretching this first daily cycle. Maybe this week we can come up, make a higher high, maybe test this 29 to 30 level right in here, and then we get our pullback into our daily cycle low, and then probably the second daily cycle is going to break out above this resistance zone, and this is such a long sideways consolidation that it should have the fuel for a really explosive move. And I tend to think that we're probably going to test $50 sometime later this summer when silver breaks out of this consolidation. And I do think it's going to break out during this intermediate cycle. But I also think we've got to have some kind of temporary correction first into that daily cycle low, and then I think we're set up for a breakout above the upper part of this consolidation box that silver has been locked in for the last 9 months or so. But once we get that corrective move, then I think you want to have at least half of your position in silver, maybe half silver, half miners, but definitely you want to have some a position in silver, because I think that's going to be where a really strong trending move is going to occur during the next daily cycle.